Hello and welcome to our weekly chart review. This is Saturday, May 21st. It is the calm before the storm for the stocks. Yeah. All right, let's dive right in. So if you watched the previous episode that I did, I simply drew a very large, maybe I didn't do it in the last episode, but this is a very large Fibonacci channel that goes back several years. I just really wanted to see what it can encompass and if there's any significance in between any of the lines, right? I did mention before that it's this black EMA, which is the 987. It's very significant. Where the last time that where we had one wick cross that EMA was the peak of COVID. All right, and as soon as it crossed, it reversed upwards. So this, based on past history, this is a very good chance that we've seen the absolute bottom. Okay, there is a slight possibility that we may drop a little bit lower to get to this aqua just through the EMA, but I believe that let's see the point range that we have here from where the lows that we hit on Friday. It could possibly drop another 200 points from there, which would take us, what was that actually? I should keep that number because I have another chart I want to try it out. 11,267. Okay, so right here where it's all the gaps that I drew up that need to be filled, 11,267, 11,260. That's pretty damn close. Right, so if we take it right there, just double check, 267, we're looking right there, that's pretty much going to be that line. So very strong potential that, I'll add the EMA here just so we have a clear visual on the daily. Okay, let's see that black line. I think I just have to add it. Yeah, 610 and 987. Okay, so yeah, there we are. So as you can see, very, very close to getting to that point. The last time I made this video was on the 13th, 14th? No, it was the 14th, right? And we almost came down there before reversing a little bit. The one kind of ray of hope that this brought was the last 2 days, we didn't really move much lower than we've had before as far as the close is concerned. The daily range, yeah, it was pretty steep, but the actual close, it wasn't as bad, right? So we closed on Wednesday at about, let's see, 11,886, and now we're sitting at 11,837, so about 60 points lower. But it's much different than having a big range of 591 points up and down through the entire Friday. If we switch this over to the 1 hour, you'll see what I'm talking about. I just have to zoom in a little bit. Okay, this will be more significant to all the moves that we've had. Okay, so all these drops happened on the 18th, which was Wednesday. Okay, and it left a gap from the previous day's close. So this is something that we need to shut down, and I predict that, let's see, so we've had 1, 2, 3 days, 3 days worth of movement. I better move this guy up, actually, he's in the wrong spot, somewhere around there. I'll switch it to the 15 minutes so it's a little more accurate. 7:15, okay. There we go, and back to the 1 hour. All right, so there's been 1, 2, 3 days worth of more or less dropping from that gap. It's got 2 more days until it hits before I just turn into a blue line, right? Like this guy all the way from November of 2020. That's where this blue line is from. It's very crazy how deep it actually went. I was not expecting that, I'll be honest. I thought it was going to cut off around that 12,000, 12,400, around there. I did not expect this to go even deeper, right? Like we saw here, it was previous resistance zone. And then, for 4 days we kind of went up, then we tanked. After hours we hit that area once again and then pulled back up. But Friday was quite the surprise, and it just dropped harder, right? If you want to see the significance of Friday, let's take a look at how steep Wednesday dropped first. Okay, so it opened here and it just kept going straight down and closed about 425 pips down. Okay, now Friday it dropped 452 pips. Okay, it dropped 452 pips and then went up, or pips, points. Sorry, I'm used to Forex, pardon me, points. And then it went up 260 points from there. So that actually moved over almost 700 total, right? Much more significant than we had the play on Wednesday. But that was a bit of a lifesaver actually near the end of the day. Right, what happened is it actually just engulfed the last 5 hours worth of candles, and it closed above the red EMA on the 1 hour, so pretty decent sign. Overall, okay, I'll show you what this looks like. I use the trend-based Fib extension on right here, so where it's the second highest peak from our all-time high. Right, second highest because it kind of retraced back to that point very closely anyway, and then it went down to our first lowest area before pulling back up. And the reason I use that one is if you just draw a regular fib, I know it's going to be a lot of colors and lines, but that peak happened exactly at the 618 right here. All right, so that's the significance of me using that trend-based extension there. And then when I draw it up, it just entered my little red zone, like just the tip, just the cusp of that wick crossing over before rejecting off and going higher, right? So what this is telling me is, like I drew over here, now it's a little cleaner, okay? This is the reversal zone. I'd like to say I'm 100% positive in that, but I was positive that our reversal was going to be around 13,000 the first time here, and the second time where we had that big rejection on May 4th, right, where our price, what was it, the bank rates came in, right, and interest rates went up, and we saw a lot of buying pressure that day. And that was the other zone that I believed we were going to cross. But there was something in the back of my head that kind of believed we were going to drop down to the black on the daily time frames. Right, so unfortunately it was a lot steeper than expected, but in the world of trading anything can happen, so best to prepare for that one. I'm just going to delete that highlighted circle so it's a little cleaner. All right, so very strong area right here, anywhere between well, now it's at like 11,000. Where did it close? 11,000, right here, 11,836. It's showing me right there. Okay, that's where we closed. The lowest I believe we're going to go is maybe 11,280, around that area, and that's kind of all she wrote. I don't expect it to go any lower, just because this has been the most steepest drop I think in the last 50 years. And judging by how much that is as far as from highest point to where it's at now, like the peak of the low, NASDAQ dropped 31.5%. That is very significant. If we take COVID, for example, right here, okay, that is a drop of, from peak to low, 31.93. So I mean, we're what, less than 0.5% off of being lower than COVID, right? And I mean, our economy should be in recovery right now. The only problem is, one issue after another where our governments keep giving away money to random causes and issues without solving the problems that are happening more domestically. So, all that money that's being printed, it's causing everything else to lose value. Now, the surprising thing is, when money is inflated like this and it loses value, The stocks is what will kind of mitigate that pain, right? So jumping in and buying stocks or bonds or anything like this is how you kind of leverage what you have and prevent it losing value in the long term, right? So for example, inflation went up what 9-10%. Let's just use a round number 10%. It's probably higher overall, but it went up 10%. That means the dollar lost 10% of its value, basically, right? Meaning, well, probably a little bit more than that, right? But everything is on average cost 10% more, right? If everything costs 10% more for the exact same product, that means it's not the product itself that's more expensive, it's the value of the currency that's worth less, okay? Because the currency is worth less, you want to leverage your investments in something that you know is going to climb long term, right? If you just hold money, you will lose that value very quickly, right? Take Venezuela, for example. Once the government ended up printing money like crazy, the people that had been saving their entire lifetimes and just held it in their bank account, let's say the equivalent of $100,000 they had saved, by the time everything kicked in and socialism was in full swing, that was barely enough to buy one chicken, right? So it kind of goes to show you that holding on to the money itself, meaningless. Okay, the best way to actually leverage your positions and make sure that your investments, or your net worth, even like that's probably a strong way to put that too, is to put it in something that you know will grow long term. What is one of the safest things to do? Insurance. Everybody needs insurance. It's never going to die, right? Look at the most popular insurance companies. Do you see them tanking in the near future, right? What Warren Buffett calls, what's that term? Let me just take a look at it quickly. I was just reading that book earlier today, and I always forget that first state. Durable, that's it. Durable competitive advantage, right? It's mentioned in his book, I think, 100,000 times. That's an exaggeration. It's probably not even 100,000 words, but durable competitive advantage. Okay, very, very, very important phrase to memorize. The reason behind that is look at companies that have something that they offer that is very difficult to beat or replicate by others, right? That will kind of hedge your bets against inflation and the potential of that company losing value or going out of business in the future, right? Like Warren Buffett does. Look 10 years in the future. Do you think he's worried about this 31.5% crash in the market? Nope. Because a person like him will understand that this is the time to buy. Okay? There is no better chance to buy from previous peaks than it is right now. And let's go over some stocks just to kind of get that understanding underway. All right? Now, full disclosure. I am not a financial advisor. This is not financial advice. This is strictly my opinion. So if it's something that you take as gospel, then I'm sorry to say this is not the Almighty's word. Just make sure that you do your due diligence and research everything in your fullest capacity that you are willing to invest in, okay? Do not just look at this and be like, yeah, Greg seems to know exactly what he's talking about. I'm gonna invest exactly how he is throwing out his ideas. If you really want to play that game, that's up to you. But whatever I say, there's always a possibility I'm wrong. There's a possibility I'm right. Flip a coin. I don't want to shoot myself in the foot either, but make sure that whatever is mentioned, you do your research. Okay, I'm just throwing out ideas and trying to maybe ease a couple of people's anxiety, so to speak. All right. There's a lot of people that have massive positions that have been losing money, and just try to understand that there is light at the end of the tunnel. This doesn't go on forever. It may seem like a very slow and painful bleed right now, but the majority of stocks do recover. Okay, now let's go over that list that I have right here. And again, if there's anything that you want me to add to the list, please mention it in the comments. I'll do my best to go over it quickly and do an analysis and see where it's headed in the future, right? But this is strictly base technical analysis. I do not have access right now to fundamental analysis for these particular stocks. I'm just going as to what the charts say, right? Fundamental analysis is crucial when you want to invest in a particular company. You always want to look at their balance sheet for the last 10 years and see what their earning per share is, EPS, year over year, right? This is going to be a very important number for long-term investments. If you really need to know, honestly, just take a look at Warren Buffett's book. It's very good information. It was published in 2008. It's still incredibly valid. I would recommend reading that. It's called Warren Buffett and the Interpretation of Financial Statements. All right, that is the title of the book. I have it on audiobook and paperback, so do your due diligence and really learn this market, and you will have a great time. Okay, this will not scare you anymore. So we analyze NASDAQ. Let's take a look at US 30 quickly because it's just as painful. Okay, holy cow, look, it's coming to that same point, right? Going down to that black line. Let's take a look at my chart right here because these are two different ones that I've drawn up. Previous area that I was projecting a rejection off of, it blew past. So I'm going to delete those lines. Okay, they are meaningless now. And now it's heading to the black EMA. I haven't kept up with this chart as often as the NASDAQ. I have more positions on NASDAQ. That's why I focus on that. Okay? So what we see here right now, we kind of had a little bit of recovery. Basically, the day ended in a doji. And I have a feeling it's going to drop a little bit lower. But let's take a look on the daily to see the last time it was near that line. Okay, so it crushed through COVID. Previously, though, it was in 2018 where it came very, very close. And like we saw in the NAS, right, that was the last true bear market before the manipulated bear market. Okay, and before that, let's see, right here. Okay, so the last time it touched these lines was 2015 and 2016, about a month apart. So that was another bear market that we had. But again, you see, it was just kind of, it touched, it didn't really hang around there that long, and it rejected up, right? So let's see how far back we can take it. And again, another bear market in 2011, right? Going from the peak that we had right there. See, it didn't hit the other peak, so that would have been a good inclination that it's dropping. But 2011 to 2012, so that was about 182 days before the price recovered to where it was at, right? And if you take a look right here, right, interestingly enough, we grab from the low and we go to the high. Where does it hit? Kind of just almost at that 50%, right? So it didn't really cross the 50%, so that shows that it's going to be a strong growth. So it dropped a little bit below previous high, but because it's making new highs, that is a strong indicator that it is going to go higher. Okay, so as you can see, right, it doesn't cross the black line that often. And the times that it does, like this was a very big bear market, right? And what was that? The housing crash. So when did it actually recover? It took a long time, right? That was a true problem. And it took until the price came back. It took 1,970 days. So 6 years, just about 6 years, right? That was a true bear market. All right, so where we're sitting at right now, there hasn't been anything. Again, diseases are one thing. It's something that we can always overcome. But as far as financial stability that's going on in the markets right now, it's not something that is unrecoverable, right? Like Dow Jones experienced a much, much steeper crash than the NASDAQ did, right? Because tech stocks are largely unaffected by things that cause people to stay at home. Like they actually thrive on that. But if we take a basic Fibonacci on the US 30 and we draw it up, it's barely crossing the 318 from its previous low, right? But the previous low was very low. It dropped, like if we go from high right here and measure, it dropped 38.48, so 38.5%. Okay? And right now from its peak, it's only dropped about 16.6, 17%. Okay? If we're looking at that same drop, interestingly enough, how it comes down to the Fibonacci, right? So what did I say? That's 31.37, and this one is 38.38, right? So we're looking, the Dow Jones has the possibility of going anywhere to the 618 down to the 786, anywhere in this area, right? If we are going to experience a crash like this would be the potential target for the Dow Jones. Now, that's terrifying, honestly. Judging on how we saw it sharply go down here and then recover, we are not in that same category as we were before. We're looking at something like, where is it? We're going to be looking at a market that's almost like, no, earlier, something like this. We don't have the data there. You know what? I'll switch it over to the Dow Jones index. That'll actually have the information right here. Okay, so it's not going to have my drawings, but if I use the same basic, oh well, I guess it did put my drawings on there. But I believe that we're going to be in a zone similar to, not that. Let's see where we can head to. About this area, 2000s, right? So as you see, it was just kind of, it came a little higher and it kind of trickled down. This is more or less what I'm thinking is going to be happening now, right? And the drop at that point, so just to give you an example, right, from peak to absolute low, 38.8%. Like, it's shocking how often that number happens, right? So good for you to know that if you set a target around that, that's where you find the absolute low and you start buying, right? But judging from right here, this is, I think, the tech stock crash, right? The tech bubble burst. But yeah, it still took a long time to recover, right? We saw 6 years in the housing market. So look at this one, right? January of 2020, and it took 6 years, right? Except, no, more than 6 years, right? 6.5, because the other one was 1,090 days, 900 days, and this is 2,450 days. So an extra 500 days added to that, pretty much. But I believe we're looking at this kind of slow bleed. We're going to have like sharp moves down and then, bull runs. But this is, I believe, what we're looking at for the Dow Jones, right? We're going to be in a bit of consolidation starting to trickle down. So where we're at right now for the Dow is somewhere here, right? So you saw it kind of came down halfway to the black, and then it's going to recover a little bit and then consolidate and then drop lower and then recover and then, kind of drop, consolidate, and then drop lower, right? So it could be very, very painful. I would say, for my non-financial advice, if there's a potential to recover some positions, right, I would get out of them when it kind of breaks even at this point, because they will be dropping lower, right? Like, you see the pattern. Kind of goes up and down, recovers a little bit, drops lower, recovers a little bit, consolidates, drops lower. Okay, so I'm going to do a side-by-side. That's going to be a pretty good thing. So US 30, we'll just leave it at that. It's the exact same thing. This is just the one you can trade on. Okay, so here we are, right? Like I said, potential drop to there. Okay, and what we're going to do is do a side-by-side comparison, maybe above and below, right? And then the bottom one here, I'm gonna flick onto the Dow Jones right there. Okay, and then bring it all the way back to 2000. Okay, so let's see, 2000, right around there. Yeah, okay, so if we take a look at where we're at right now, all right, the peak was about here. So we'll zoom in on that, and I'll just put it in the center so it'll make a little bit of sense. Okay, and then the peak of this was about here, so we'll zoom in on that as well. All right, yeah, it looks about right, and then just stretch it a little bit. Okay, so it may not look exactly the same, just to make sure, right? So if we go January to February, so that's a month. This is January to end of March, April. So this is kind of happening in a shorter term, right? But the market is very similar, right? So look what we have here. We have our peak, then we have our first bottom, right? Peak, first bottom, recovery, quick recovery, and then sort of longer drop down, and then consolidation, right? Kind of sharp drop down, but consolidating lower and lower, right? A little bit of a recovery, right? Like we have here, right there, except we've consolidated a little bit, and this dropped sharply, and then consolidated, and then dropped again, right? But now we're still in the drop. So this is kind of the area where I'm looking at. It's just pinpointing the exact drops and time frames and whatnot. It's going to be that's the difficulty of trying to make sure we get the right spot. Maybe that one, that looks pretty good, right? But like I said, this is going to be in a shorter time frame than we had here, because this was actually a bubble that burst, whereas here there's, again, just policy. Like there's nothing that is affecting stocks in such a major manner except manufactured problems, right? So a war in Ukraine and Russia, how does that affect Wall Street, you ask? Wish I could tell you, right? It's all speculation at that point. But what I really want to say, in my opinion, is it's not the fact that oil is driving up all the prices, because United States and Canada get their oil from Russia. Canada and US have an abundance of oil. What's the problem? Why do both our countries not want to actually mine it or gather the resources? Because of policy. The policy is making it so difficult and so expensive for companies to actually go in and withdraw the product that it's cheaper for countries to import, and they're not going to go through all the red tape. Like, it's cheaper for a company not to dig, or more profitable for a company not to dig or drill than to actually go through all the insane policies that are in place right now to harvest our own products. That's how stupid it all is. And I got to tell you, folks, when it comes to policy and politics and all this sort of stuff, look at the people that go into this profession, okay? Because politics, like anything else, is a profession. It's the people that have been to school, haven't left school, and all they do now is jump into politics. How many of them do you think held real jobs, like 10% or less? And look at the ones that are getting the most frustrated. They're not the ones that are creating the policy. The policy is being made by people who have no idea what they're doing. Okay? It's the same thing where if you've never owned a business, you have no idea how to manage a budget. Okay? And this is what we're seeing right now. These people that are in power have never managed a business, have never worked from building something from the ground up, hiring employees, working on their capital expenses, creating their investments, having to worry about labor and other costs that are associated with running a business. They have no idea. Everything is just like a magical number. Let's throw money at it and that'll fix the problem. And if we've learned anything at this point, it's that money will never fix any problems long term. It's just a band-aid. It's a band-aid over something that requires surgery. Okay? The only way that we're going to be able to get out of these holes is when people that actually run businesses go into politics. But there's absolutely no no draw for them to do that. Why risk multi-million-dollar business to be able to run in politics and get all your shit kind of smeared all over social media and mainstream media, right? Donald Trump tried it. Look what happened to him, right? He was one of the most popular guys in the early 2000s, early 2010s, and all of a sudden, when he runs for politics, he's the most racist, un-American person there has ever been in anyone's lifetime. Like, guys, why do you think he wanted to risk so much of his own money, time, freedom to be able to do this for everybody? He got sick and tired of what he saw, right? And it's going to happen again because now a lot of people realize that, hey, you know what? Maybe it's not the guy that we wanted to have in charge, but it's the guy that we needed. Because right now, it's the guy that, and I say in quotations here that the majority of people vote for in the freest and most fair election that was ever held. But yeah, this is the product of it all, right? And I would say kind of rethink what you guys are doing. Rethink what you want to run for. Rethink who you vote for. It's going to be all important. Look what's happening with Elon Musk right now. He's standing up for himself, and now he's getting the crap tarnished out of him too. It's bound to happen. Now, anyway, I apologize for the rant. Let's get into stocks. Okay, I'm going to switch this back to single view. But like I said, this is where I believe we're at. It's kind of 20 to the 2000s, but in a very compressed form. It's not going to take 2,500 days to resolve. It's probably going to resolve within the year, but it's going to be very volatile until then. Okay, so let's just jump right in. Apple. Oh, we're going to do it on this chart, actually. Pardon me. I'm going to switch this back to NAS. And this guy, did I mess anything up? Oh, good. All my lines are there. I'm going to save that just in case. I don't want to mess that up. It took a long time. Anyway, so Apple. All right, what do we have going on here? Long term. Okay, long term, it's still a very strong stock. It's the lowest that it ever dropped, right, where it hit its lows right here during COVID, where everything kind of dropped off. It's looking at about 35%. How much has it lost right now since its peaks? 27.5%. So quite possibly a little ways to go, but not very far. I would say we're looking at that red line, the reddish pink line right here. That's where it's going to reject from on the Fib channel. I do not see it going much lower than that. Apple's a very strong stock, when we're talking about a durable competitive advantage. No one besides Microsoft even comes close. Okay, it's really Apple and Microsoft. Those are the two at the top. Everybody else is picking up the crumbs. Okay, so like I said before, it is possible we'll drop slightly lower, but I can see a recovery probably about to the 170s before it goes lower. If it fills this gap, it would make total sense back up to 173, 174. AMC, now I drew that line before, but again, it was based on something that we didn't see coming, right? Everything just kind of dropping lower and lower. But look how, oddly enough, how low everything is going, right? So look at this line, and it bounced off there twice, and now it kind of broke through it, but it's being pulled back to that line. Okay, so I would say this is going to be a very strong opportunity to be able to grab a position from, right? And setting a stop loss of, how much would that be? Maybe of $1.50. That'd be more than enough. And like I said, I can't see it coming up higher than maybe 25 $3.22 per share, but that's still, a very good ratio. Don't mind the stop loss. That's more for Forex, right? It's not going to help so much, but it is an increase of 81%, right? So that's not so bad. AMD. AMD has a good recovery to go to as well. Like you saw here, the purple line was a previous resistance. Now it's using as a support. It broke through and it's kind of hovering in between those for the last few days, or weeks, I should say, since kind of end of April. And it is rejecting off there. And now it's kind of rejecting off that 610 EMA. Okay, so very strong chance, like I was saying, this could be the bottom, right? We need to check multiple stocks to be able to confirm that on the NASDAQ, right? As you saw here, where we're having the rejection, it's very possible that if a lot of stocks have that similar pattern, then hey, it's a good opportunity, right? Amgen is not going to follow that pattern, so we'll leave it alone, right? As far as this stock goes, it's in much better position. As you saw, it kind of broke through previous high. And right now, if we draw a Fibonacci, right, it's at the 618 now. So, I mean, we could see kind of a short-term drop, but it's not going to break that low. I do not think so. Okay, so there's that. This one is going to climb, but maybe it's going to reverse down to, I don't know, maybe 232 or so. Just off that white line, just like it did right here. But yeah, anyway, I'm not trading that one. I'm not too familiar with this particular industry, so I leave it alone. Amazon, hard drops, right? Earnings was the big catalyst here, right? But as we know, Amazon is still one of the ones that it's right, that durable competitive advantage. Who else? Like Shopify doesn't have what Amazon offers, right? Amazon has Amazon Prime, right? The Audible. There's so many options that Amazon has, and it's kind of the cornerstone of a digital market space as well as online shopping. Do your research. I would say it's going to be a very important thing to look to in the future. But I do not believe that this will drop that much lower. Like as you see, it kind of broke through this aqua line, but it's hovering around there right now. Similarly to how, maybe right here where it hit the yellow after dropping and then it slowly went up, right? Where was a previous rejection like that? Look at this yellow, right? Kind of bounced off there and hovered several times. So we could be seeing the same thing for that aqua. If we go down to that yellow, it's getting to the point right here where we had the March 2020 lows, where it was the COVID lows, right? It's almost at that point. So we'll see how far it goes. It's still, from that point, it's got another $400 to drop. But again, it looks like it is a possibility that this will recover just like anything else, right? It's staying around this area. If it breaks out of this little box and goes lower, then, I would avoid it for a little while. Probably pick it up around this line here, right? So let's say worst case scenario, let's grab it there. All right, Activision. Yeah, really weird. I mean, everything has been kind of taking a big dump, but these guys have been very resilient. Like they've dropped, like that was their earnings, but, spiked like crazy. But, yeah, after their peak, it's been hovering over the last 6 months almost, like within $3. It's not bad, $3-4. BlackRock keeps going lower and lower. Okay, do they have a durable competitive advantage? I mean, they own probably the most real estate in North America, so I would say, yeah, they probably do. But here's a fun thing to draw on. Look at this aqua line right here and this aqua line. It broke through and then just started climbing. I'm telling you guys, like this is the very strong potential that this is the reversal zone, right? So before we go down, I want to see what the Fibonacci retracement looks like on BlackRock. Okay, so we'll draw it from there to there. We are in the golden zone, right? We are in the golden zone. This is like anywhere from this line to this line right there, those two, that is anywhere potential reversal zones. Okay, and since it's kind of hovering around the aqua, right? And again, everything's on the daily time frame. Since everything is hovering around that aqua now, very strong chance that it's going to slowly start to climb, right? Uh, it hit peaks again of like $973 back in November. I can see that happening again. This is just buying a strong company at a bargain price. Berkshire Hathaway, right? Similar sort of story here. We know that this stock, when it drops down, it doesn't drop down as much as its competitors. Look at the March numbers, right? Like it went from a peak right here of 231 down to 159, so that was 31%. But within 7 months, I guess, 267 days, back to at its previous price, right? As the Dow Jones did the same thing. Let's see, US 30. Okay, let's grab US 30 and let's take a look as to what that looked like, okay? When it recovered. It took its high right here, February, and it recovered in November 9th. Okay, when did Berkshire Hathaway do that? February, November, pretty close, November 16th, right? So a week later, it recovered its price. The difference, though, is that the Dow Jones dropped over 50%, I believe, right? So let's take a look, just to refresh everyone's memory, including my own. So it dropped 38.53%, and this one dropped, what did we say? 29%, 30%. So again, not as steep as the Dow, right? Currently, it's dropped at its peak, I guess, it dropped 17%. And where the US 30 is sitting right now, it actually hasn't dropped that low, right? 17%, almost exactly. Right, so yeah, very strong possibility the Berkshire Hathaway is going to go lower. But yeah, I would still say that it's a very resilient stock. You know, I'm a fan. Again, it's basically investing in the guy that does all the long-term investments. So Berkshire is always a long-term hold, right? Berk A is now, I think, like over 500,000, right? I'm just going to take a look at my Webull account, just on the watch list, right? So where do I have Berkey? Where did I stick you? Oh, my mistake. It is at 456,000. It hit its peaks, yeah, about the same time as everything else at $544,000. And that peak was March 24th of this year, right? So similar to this guy, or 29th. Can't really see off the phone, but yeah, around there. So B is 361 and A was 544,000. And what I remember it being, I think, when I took a look at it in January of 21, it was hovering around 400,000. So, I mean, again, it went up 20-ish% in the span of a year and a half. That's not so bad. Like, it's a very standard climb. It's still higher than what it was at its high beginning of last year. So there's that. Anyway, moving on, Caterpillar, you know, I'm not a huge fan. This one's kind of all over the place, regardless of where markets are at. This is its own animal. Costco, very surprising. I did not expect a big drop like it just had, right? But we're going to do the Fibonacci, and oh, look, it's already in the golden zone here. There's a very strong chance that this is going to reverse, and earnings are coming very, very quickly, right? We're going to be seeing earnings on the 26th, and estimate 3.05 per share with $51 billion in the quarter. Costco is a very strong company, guys. Like, I know Target brought everybody down earlier on in the week, but I really, really struggle to believe that Costco is going to drop even further after earnings. Again, I could be wrong. It's just, when was the last time you went to Costco and saw an empty parking lot or the gas stations that had no lineups? right? And does it matter what time of the week you go? I mean, the weekends obviously are the worst, but when have you ever went to Costco to fill up on gas and not waited at least, the fourth or fifth car in line? So yeah, I mean, just speculating right now. I'm not looking at financials or anything. Strictly based on personal experience, what is Costco's competitive advantage? Buying in bulk, right? And buying at cheaper prices than anywhere else. So, yeah, it is, I think, America's favorite store. It really is. If it's the Amazon of retail, or Amazon is the Costco of online shopping, whatever, right? Either way, it is a very strong presence. I do not expect it to be at these numbers for much longer. As you can see, there, even as COVID was happening, how low did it actually drop? Let's see, March 2020. I mean, that's nothing. That's almost a joke, right? It kind of stuck on that white EMA. It had a harder drop in 21 of last year, or March of last year, right? So now we're seeing this really strong crash, but it's heading off that Fibonacci from a previous low. Guys, I think Costco is going to be a very strong buy. Chevron. I mean, Buffett came out with his shopping list in January of 21. And if we all jumped on it, we would have been able to buy, Chevron around $80 to $90 around this area. Now it's what, 100 and like anywhere between 160 to 175. The man knows what he's doing, guys. And he switched up the couple days after Biden took office. He's a smart man. He knows what was going to happen, right? He knew that Biden's energy policies were going to screw, the industry, making oil and gas more expensive. What ended up happening? Right on the money. He nearly doubled his investment within a year and a half. Yep. Disney. I don't like it because it's a pile of crap right now. It's like a burning garbage dumpster fire. Not a huge fan. It's almost getting down to its COVID lows, which is crazy because COVID, that means they close down all their parks, their cruise ships, everything. And now where the price is at, all that stuff is open and it's still almost that bad. Like, damn. Right? Earnings, let's see. Estimate it went lower than expected. This one, obviously, we expected much lower than that. But let's see, in 2019, as it was climbing, what was it expected? Everything did okay, so it boomed. And then a little bit of a drop, significant, right? Like it dropped under estimates pretty hard. And this estimate, like it's supposed to had higher earnings, but per share only $1.08, right, compared to $1.35. So that's a big difference. Right after here, 91 cents, 60 only per share that it went up, and then 79, 80, 37, $6. It's kind of all over the place, right? Not much of a competitive advantage as it once had. Although, if they kind of rethink their agenda and stop kowtowing to the mass populace, I think they can really reverse their position and start climbing really quickly. But it's all based on listening to morons. Anyway, Docusign. I honestly think that this is a very strong bargain to grab right now. Like when it bounced off the low right here, it kind of hasn't returned, right? And Docusign follows the nasdaq. Okay, so as you see it right here, right, we'll pop over on the nasdaq, and you see it that on, like, I'll flip it over to the 4-hour chart here. All right, on the 4-hour chart, it's lower than it was over a week ago. Docusign it's closed out higher than what it was a week ago. Okay, this did not. Well, it closed out, I mean, let's see, what's the comparison here? The lowest that it was at was right here, that it closed, and now it closed 46 points, 60 points lower. Okay, so Docusign by comparison closed on its lowest point there, and now it closed $3 higher, 4%. Whereas NASDAQ was, oh geez, I don't want to keep redrawing this, but NASDAQ was 0.39% lower. So Docusign is in good shape to actually start climbing, right? We saw that switch on the EMAs happen, but it still stayed very close. Bounced off the aqua line. Now there's a very good chance that EMA switch is going to happen short term. Okay. I'm a fan of this one as well. I have several positions. Dow. Oh, hello, Midnight. The Dow, it's steadily climbing, just rejecting off the pink EMA in the most recent future and continuing to go up. EA Sports, EA Sports, just EA, Electronic Arts. I guess the sports is included too. But earnings, it didn't do so hot, but it recovered pretty quickly, right? I wouldn't say that it's the worst in the world. That was pretty good. I don't know why that's a terrible earning. Like, it's 3.17 a share, and this one was like 1.32. This one was 1.8, 0.81, 1.23. Like, that was fantastic earnings. Man, people are greedy, eh? Holy. Anyway, EA, I'm not a fan of any of their products, so I don't invest in that. Do they have a competitive advantage? Not really, but they do own a lot of the rights to a lot of big titles that people like. Star Wars, I think, in particular. So, yeah. Pardon me. But, yep, still not a fan. Activision is probably one that would be more up my alley. Just because they, when they teamed up with Blizzard, Blizzard has a lot of strong marketable products by comparison. Anyway, let's blast through the rest of them, right? I'll just jump on the ones that I'm interested in. eBay, nope. EGLX, nope. Facebook, kind of. Had its rejection. It's a strong possibility it'll start going up. Frontier Lithium, love this stock so much. Look at it go. It's just, it won't stop. They definitely have a strong competitive advantage because they're one of the only Canadian mining companies that's going after big lithium deposits in northern Ontario. Okay, and they have a huge area of untapped land to be able to mine from, and I haven't looked at them in a while, but they were surveying last year, I believe, and I think this year is when they're actually going to start digging. So as you can see, this was just kind of nothing, and holy cow, right? So again, I mentioned this before, but this is kind of like one of my sour grapes. I had it around that $97 mark before, and could have went up almost 300% in a year. So live and learn. Trust your gut. Do the Warren Buffett thing, right? This is where I did my due diligence, and I was right. I was just impatient, and it bit my ass. GameStop. What to go over here? Google. Google still is at the forefront of being the king of the internet, really. But check this out. Look at all the rejection that happened here once it crossed that line. Look where we're heading to right now. Okay, so strong possibility that we're not going to be going much lower. Okay, Goldman Sachs. What have you hit? Where are we looking? Bounced off the aqua and hasn't returned since. I have a feeling it might return once again, but it's hard pressed to believe that that might actually happen. Everything is still pointing upwards in the long term. just a drop like everything else, pretty steadily. Let's see what the percentage is like for Goldman Sachs. From highest to lowest, 31%, so on par with everything else. Home Depot. Oh, this one was painful. I was really looking forward to this climbing, but it is not just yet. The new support zone is the previous resistance zone. So I believe that Home Depot stock is going to blow up. It just had earnings, right, a few days ago. And yeah, it did very well. And yeah, that's going to bode extremely well for a lot of other building companies. Simply because there was a report saying that there's a lot of home buying interest, and they're selling materials and products at a faster rate. So extremely, I'm bullish on this one. Like I do not see it dropping too much further. Honeywell, its big range of consolidation. This gap was closed, pretty good, right? HPQ. So new news out of Pyrogenesis, right? So their Pure Vap, what is it? Pure Vap. I forget what the rest of the name is, but the Pure Vap is the thing that they have copywritten. It's draws out silicone from raw materials, I think like 6 times faster. I think, what is it, like there's 9 or 10 steps. Like, don't quote me on this. I just brief it over and I don't remember the exact details. But there is, it skips a lot of steps, right? So silicone is able to be drawn out at a faster rate, which they can single-handedly end the superconductor and the chip shortage, right? As long as more companies want to actually use the product in its greater value, right? So as you see here, even though this is the TSX, right, it does follow the NASDAQ pretty well. It's gone higher than the previous low, so this is climbing. I would say that, we've had our rejection zone already. It came back to this area. There's a very good chance, like they haven't reported earnings because this is still kind of like a trial company of Pyrogenesis. But as you can see here, while everything tanked, these guys went up 10%, right? And that's during the market. They actually went up another 6% after hours on Friday. Okay. Earnings, again, they have a little block right here, but they don't have actual financials yet because these guys have just been creating product, a lot of R&D. But that is going to pay off, I believe, in the long term. It's a gamble right now, but I'm a fan. Let's see, IBM, just like, I don't like any of the rangy stuff. It's not for me for a long-term investment. Intel, not looking so hot, right? As far as a reversal zone, what are we going to base it off of? It's already lower than it's been for a very long time. So yeah, stay away from that. Intuit, hitting that that yellow line and the EMA, so it looks like it's really pulling the price towards it. It's kind of looks like it's magnetized. Last time it dropped that low was March, and it hasn't seen lows like that since, or previous. Okay, everything's just been stable growth. So right now, very strong chance to buy too, right? It's I don't believe it's going to go much lower than it has. Market closed lower like we saw on Friday, and the price of this is about $30, $20 higher than what it was last week. So this would be the time to grab it. Johnson & Johnson, I mean, what do you want me to say? They sell drugs. Everybody's going to need drugs. Merck, very good recovery. Like from February, it's just been going up and up. Very nice. I did say there was going to be a gap to fill, right? Way back here. I did say that, and it did get filled, so that's why I deleted it. It happens. It happened with them a lot faster. But check this out. Black, 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 black. That's their beautiful spot, right? And previous peaks, broke those peaks, broke them again to a new area that it rejected from, that nice purple line there. So very strong to jump in on there, right? Like the time has come and gone for them. It already went up 20-ish%. Microsoft, look where it's sitting, right on that aqua, where we had the lows last year in May, a year ago. Okay. Yeah, about there. And then let's see, where was COVID? Right here, just a small dip and quick recovery, right? And yeah, up it goes. So again, strong rejection right here. We'll see how the next few days develop. Once EMA switch, maybe even on the 4-hour on these stocks, that's when I'll be looking for entries. Netflix. Yeah. Wish I could say something nice about them, but you know, as far as that's concerned, that's pretty good. Estimated earnings gone up, but the panic was that they lost a lot of subscribers, right? Okay, sure. Just stop toting to the woke culture and you'll be all right. It'll bounce off. It's hitting off that aqua right now. We've seen it play out like that before. Where was the last time it hit that area? Like way down here, right? That's where I drew the lines from. So as you can see back in 2013, 2015, it just hit that line last week on Thursday. And I believe that's the bottom. Like I don't foresee it going lower than 165, 164. It's currently 186, so already run up $20 a share. Now, guys, I mean, from its high at $700, there is no way that is going to stay this low. Like this is a bargain right now. Look at this giant gap to fill and the other one up here. I have a feeling it's going to go back up to the high 400s within the next few months. Neo, I don't know enough about them to judge. It was just requested before. I do not. Again, I'm not a huge fan of just car companies or electric car companies. I'll get when I get to Tesla, I'll explain. But when you're just in the habit of releasing a car and hoping that you're going to be, you know, disrupting the market somehow, that's not really how it works, right? Like the automotive industry is incredibly lucrative, and car companies that have been around for decades, they struggle, right? So it's not something that you can just willy-nilly jump into and solve the problem. So right now, Tesla kind of has the market in electric vehicles. Everybody else is just jumping on the bandwagon. But Tesla has something that no one else has, and we'll get to there. Nike, I mean, Nike's Nike, right? I mean, not the biggest fan, but again, it's kind of hitting its pullback zone that we had a lot of consolidation here. You see it's rejected off this yellow line, just like a lot of previous stocks. So it's a good chance that this is kind of done. Dropping anyway. I'll get rid of those fibs. Nvidia, where are you going? Look at that. Very close to rejecting off that line twice. Okay? And I really don't think it's going to go much lower. If it does, it's just going to hover between the aqua and the black here. Let's see. Nvidia really just follows Bitcoin's spikes and downfalls too, though. Right, like we saw way at the end right here in October, kind of peak November 22nd, and then the drop. But yeah, I mean, I don't know if I can see it going all the way up to 350 in the next year, but definitely up to 250. That's where we have the last gap, and maybe in the next few weeks we'll see a recovery up to that area, and then a steeper drop down. Pinterest, you know, it looks like a dead stick at this point. It looks like the, you know, the bouncing cat, right? Kind of hit, went back up, and hit the low again. Not sure how low this is going to drop. Again, everything looks like it's kind of bottomed out. It's lost a lot of steam, right? Same thing with PayPal. You know, almost at that aqua again, but it looks like it's doing a reversal near the end of the week. So yeah, strong position potential to get in right now. Low of 72. Now it closed off at 80. You know, and a high of over almost 300, over 300. 297, pretty close. Very strong potential. Pyrogenesis, I just talked about them a little earlier. Really like what they have, but they are R&D right now. Roblox. I mean, I don't really have a strong opinion on Roblox. I'm not a fan. I'm a much older gamer than what this clientele, what they developed all this for, right? It's developed for all the teens and tweens to beg their parents for money so that they can fund their garbage accounts of, having a rocket pack on like the worst graphics I've ever seen. I have no interest in Roblox. I really don't. I don't see what the draw is besides, people being imaginative. It's kind of like a metaverse for teens and tweens, right? The only difference is your avatar looks like a downgraded Minecraft character. Roku, close the gap. Look at that. Very nice. Delete that. It's hovering around that white line. It kind of hit its low, and it's been sitting around the 90s now. Very strong potential to climb. There really isn't, like, Roku, it's not just, it's hardware and software, right? It's not just, like Apple TV or anything like this. Correct me if I'm wrong, but I do believe that they have much more to offer as far as that's concerned, right? But look, not great to have a negative EPS, but that was beaten, that was beaten, that was beaten, beaten, beaten. Like, they always estimate the worst, right? And it kind of crushes expectations. So what do we have here? Oh my gosh, it finally hit its estimate. And then what? Nothing, it happened. Like, nothing happened, right? What's that kind of tell you? The drops are done, right? Like, all of this volatility, it's kind of over and done with. Like, even this one, right, where it reported slightly positive earnings but negative revenue, and then it dropped. Okay, why? Is that worse than what we had here? Right? That's probably a little bit better as far as the revenue is concerned, right? Much better. But EPS is lower, and yet this went a lot less than this one. It's all crap, guys, honestly. Like, don't worry about earnings or whatever. They're just short-term manipulations, right? It's just to scare people of their positions, or the day traders, or short-term swings. Like, it's nothing you need to worry about. Yeah, this is definitely going to be going back up. I would say we're looking at maybe mid 200s within the next few months. Spotify, same sort of thing. Spotify, a little steeper drop than most. I'm personally not a big fan of streaming music. I don't like to pay a monthly subscription for something that I just, listen to the radio with a couple commercials for. Because let's face it, it plays a lot of the same stuff. And people that listen to the older music, like I would say anything before 2010, they have that stuff. They have their collections. They're making their own list. Like, whatever. I mean, it's not for me, right? So I don't really see the value in it. I met only a few people that use Spotify, and the only time that they use it is if it's included in their cellular package, right? It's not something people kind of get on its own, in my experience. SPX, oh, this is bad. So we saw the drop, right? Potential drop, and this green line, holy cow, it's super close now, right? So how far am I off? 188 points. Where did I draw that from before? Right there. Oh, if I'm gonna be right, I'm telling you. I'm just saying. Right, but anyway, so the big drop, 1,197 points, COVID era. And overall, from peak to low, let's say we go all the way down there, it'll be about the same, 1,200 points. I wish I would have posted about this one a little sooner. Like I've been taking my time away from SPX, but it's incredibly significant when you just draw that comparison. Like it's almost there, right? So if we just have another 200 whatever point drop, that'll be the bottom of the SPX. And as much as I hate to say it, I think we're going to be going up first before we drop that low. Guess we'll see. All right, Tesla. So, what do they have that other companies don't? Right? What I was mentioning. So, if you think of them as an electric vehicle stock, you're wrong. They're not an electric vehicle stock. They're a data company, right? And what was it? What's that Kevin guy's name off Shark Tank? Like the Mr. Wonderful or whatever his name is, the dude with a tall man, short man complex, whatever. Uh, so he had a very good point because his son did an internship at Tesla, I believe, and from what he understood at that point, he completely did a 180 in his beliefs on the company. And it's simply this: they are a data company. You can imagine that the people that are doing their data mining for them are the consumers, right? How do you think the self-driving car is going to be the next big thing? These guys are going to profit selling that data to every car company out there. Like they've been collecting data since 2011, right? So the last 11 years. And everybody who drives a Tesla on the road right now, who thinks that the self-driving feature is amazing, they're doing what Google's doing when they're mapping the roads and mapping communities and all that sort of thing, but they're doing it at an exponential rate. Okay? So imagine, for instance, now every single person driving a Tesla car is mapping the world for Tesla without them spending a dime. Once they do that, they're able to sell that data to any other company for billions of dollars, guys. This is, if you think of it logically, this is probably one of the biggest undertakings and accomplishments that of any company ever created, right? Like, who has mapped out the roads better than they have, right? They have a strong potential to create like an entire camp like Google has. They have the potential to have internet search browser. I mean, with all the information that they're going to be grabbing off the data centers, off all of their driving, all their consumers, now they're working on the solar panels, which I think are going to be available in the States before Canada. Their battery stations, like every single thing that they're developing, they're thinking long term, right? And what did Elon say about those shingles, right? They're going to be cheaper to buy than regular asphalt shingles. Okay, they're going to last twice as long, and they're going to power your home. I mean, what can you ask for? You can live off the grid and never have to replace your roof, which is like between $10,000 to $14,000 unless you want to do it yourself. Just to let you know, right? It's not a cheap undertaking, but you replace it with Tesla shingles, and now you have those Tesla shingles powering your house. Not only are you going to save electric bill, but the entire load living on the grid is going to be lifted, right? What are energy companies going to be able to do? Triple the cost because you're not reliant on them anymore. And they're going to be powering the electric cars that are plugged into your home. So right now, yeah, electric vehicles seem much more wasteful because lithium is incredibly harmful to the environment. But hey, I mean, there's going to be alternative ways to source fuel in the future rather than just lithium. But until that happens, like guys, this is going to be a game changer, and you're not going to see it for the next few years. But I think by even 2025, when this stuff starts coming into fruition, it's going to be, we could be seeing Tesla at the 2000 mark. right up here. That's entirely possible. And this isn't the chance for me to miss out on that, right? I already missed out on that one when it was early 2021. It was around the 500 range right here. Like that's not coming back to there. Everybody thought maybe 700 was a little steep. It did bring back to that area, but you know it's a little speculative. But I have a strong feeling this company is going to do a lot of good. And look at their earnings, right? Quarter over quarter, it's always good, always. I mean, let's face it, to lose out 1% on your almost 2% on revenue, it's not a big deal, right? Because again, year over year, the one of the most profitable car manufacturers. So yeah, that's my long of it. Visa's Visa, right? I mean, Amex I think does a lot better than Visa does, but that's fine. I mean, they pay out dividends. It doesn't really go much besides in a range. This is not a long-term investment for me, right? Not too shabby though. I mean, as you can see, it's been climbing steadily for a very long time. So yeah, I mean, it definitely has the potential to keep going, right? And everybody uses Visa, accepted around the world. Walgreens, yeah, I mean, just because Target tanked, so did everything else. So that's kind of the reason there. Same with Walmart. Like, damn, that's brutal. But as far as their earnings go, I mean, like in the billions, this is just bananas, right? So for them to lose 18 cents per share, it is significant, but it's a short-term hit. And this was just an excuse to bring the stock to like bargain levels. Okay, like you can see within 3 days, what happened to Walmart? It went from May 17th. So right here, it went from 148 to closing at 118. So it lost almost 20% of its value based on losing 18 cents a share. That seems a little steep, doesn't it? Anyway, this is kind of the time to snag it up. I mean, it hasn't been this low since, man, COVID times. Like it really has. Like it pulled down to June. I guess the last time it was that low, and hasn't seen it since, right? Let's see, Exxon climbing just like the rest of the oil stocks. And yeah, and just oil itself, right? So very similar to all the stocks going in that direction, right? If we draw, oh, hello, other alert. But if we draw another ray, you know, we can clearly see that this is going to be heading up, right? Even the parallel channel, so I'll draw that. Parallel channel, so we'll grab it from here to here, and then up we go, right, to connect these guys. That's where we're going to be trading in that range. So I would say anytime it kind of comes to the bottom of here, it'll be a great time to snag it up. And that kind of concludes my chart analysis for the week. I hope it's been useful for anybody. Please do your due diligence and fundamental analysis when it comes to long-term investments. If you're a day trader, then, I mean, do whatever you want. But yeah, this is geared more towards the buy and hold types, right? The ones that want peace of mind, or the ones that want to hold maybe a few months and make a decent profit. So I hope it's been useful. Thank you very much for tuning in. Please like the video, subscribe to the channel, and I will see you next week.